How are we doing? Good. Okay, cool. I forget his name, but we told him that Mert's company is Helium and not Helios, and now I feel bad for Mert. But Mert just announced a $23 million raise today, so
yeah.
Congrats to Mert.
Thank you, thank you.
And it's Helios. Okay, so we are talking about crypto's identity crisis, basically trying to answer this big question that you see on the timeline, like is this cycle cooked? And why are prices at sometimes all-time highs, but people are all salty on the timeline? So we're trying to answer that in the next 40 minutes. So maybe, Jason, I'll throw it to you for this first one. Prices, Bitcoin's almost at an all-time high, but people are upset on the timeline, and there's this big question of like, is this cycle cooked, and can retail make money anymore? You had this crazy viral thread in the last cycle about how to make money in crypto. So I'm just curious, what is your analysis of like what's happening this cycle so far?
Yeah, well, I think there's a spectrum of what retail means. Like obviously, my parents who don't really know how to even use Coinbase are retails, and then folks who snipe every meme coin launch are also retails. So I think some of the retails have found pockets of opportunity. But I think if there is a theme this cycle, it's been the maturation of the market. So the understanding of the concept of fully diluted valuations. So if you think back to like 2017, 2018, I'm sure all of you guys remember, there was a lot of unit bias, right? So folks would look at assets and basically say, oh, this meme coin is trading at 10 cents. And this meme coin is trading at $1. Yeah. So to them, oh, that seems like more implied upside for the former. So that was very unsophisticated type of thinking. But I think over the cycles, people are now learning actually what the concept of valuation actually means. There's slightly more consensus on value accrual and kind of valuations for at least some verticals, especially for things like DeFi. And then one of the big things that people have been talking about is also the phenomenon of like low float, high fully diluted valuation coins as well. So a lot of that kind of recognition that a lot of projects in crypto are probably valued a little bit above where the fundamentals are is basically now being resolved. So I think it's a natural process that a lot of the altcoins basically got demolished this cycle, but it's just crypto things.
My counter argument to we're revaluing these things and it's based on fundamentals is that there are only two ways to have made money so far this cycle: owning Solana and owning meme coins. And if you didn't own one of those two things, you have not made money. So meme coins, no fundamentals there. So maybe Antonio, I'd throw it over to you. Like, what is your analysis of what's happened this cycle so far?
I'd say it's twofold. First of all, we have historically seen all cycles be 10x bigger than the previous one. But the issue is last cycle with FTX and all of that hype was so big and had so much global attention. How are we going to be 10x bigger than that? That's affecting real change in the actual world, and we're just not there yet. So I would say it's going to take us a lot longer to actually get to that point. And of course, there's hype, and then there's fundamentals. But there does need to be some fundamental value behind these hype cycles, and I just feel like we're not quite there yet. I think that's the main thing that's caused it. Yeah.
What do you think? So I remember at the beginning of this cycle, I was like buying tokens with fundamentals, thinking like the makers and DYDXs of the world, thinking that number would go up because of fundamentals, and that's not really how it's worked. So what is your analysis of like, I guess I don't know if this is to Jason or to Antonio or to Alex or whoever, but Jason was talking about fundamentals are going to drive things. What is your analysis of, is that actually the case or not?
I think both are important, and I think narratives are super important in crypto, but narrative has to be based on something. And if we just look at what is the narrative of this cycle, it's meme coins, main character being Ansem. And that's great. I definitely respect that. But let's be serious here. Does that actually hold a candle to the world-changing phenomenon that was, at least in narrative form, of FTX and SBF, right? I think it's just a different order of magnitude, and we haven't gotten there.
Yeah. Do you guys think that retail will be able to make money this cycle, like they have in all past cycles?
Well, I think your question about dispersion, your question about like everyone being upset and fundamentals are sort of related. I came from Web 2 as a traditional VC before crypto, and there's this traditional finance concept called dispersion. And dispersion is the difference between the relative returns between the best performing assets and the worst performing assets, or the best performing like sectors and categories and the worst performing sectors and categories. And there's just massive dispersion finally happening in the last few years. And I don't think that was really the case in the prior cycles. Like I think if you look in 2017 and 2021, by the bull markets, everything was just going up like universally across the board, whole categories, all categories going up basically the same. And that's changed. Some things have fallen more slowly in like the 2022 period. Some things recovered faster. And so like, Solana is one of the biggest things to recover, and that's great. But the whole infrastructure category has done pretty well, but there's just dispersion even within infrastructure. Like Solana did the absolute best, and then there's a few other things that did pretty good, and there's a lot of stuff that hasn't done as good. And then you have whole categories that have just been wiped out and have never come back, like consumer, metaverse, gaming. And it's not clear if they're down, some of the biggest assets in those categories are down 90, 95, whereas the whole market's only down 33% from all-time highs. And I think, to cap it off, like, this is a good thing, and this is a sign that the market's getting more, I don't know if fundamentals are the word, but at least more rational, Because in Web 2, like, as a venture capitalist, there's power laws, which is to say that as a VC, you expect most of your investments to do really badly, like to go to zero, and a couple to do pretty good, and then one or two to do, like, go to the moon, right? And so you would think that crypto returns, a portfolio of crypto assets should do similarly, and it's very sad, and it sucks for all the people that invest in the bad stuff, but it's probably net good. Like, it means the space is getting a little bit more sophisticated, I think.
Or you could argue that no new people have come into the industry, so the last 18 months have been extremely PvP in the industry. And that's, I could argue probably that's the reason there's some of this dispersion. And that in 2025, let's say we go into a bull market, numbers are going up. Let's say optimism starts to go up. Like Arbitrum could run, Polygon could run, because now it's some of the more retail new money. And I'm curious if you think the dispersion continues, or
I think it's a good thing. So yeah. I think it's not quite true. Like, the ETFs have brought a lot into Bitcoin, right? And Solana, meme coin, and Bitcoin are actually the best performing things, I think, category-wise. The other way to frame PvP is like maybe people are getting savvier and smarter, and it's like people that are more sophisticated investing. It's a trade-off, right? Like, but I just think it's hard to imagine any asset class where everybody makes money and everyone's getting rich forever. That's usually not how like actual traction and market share and highly network effect oriented businesses work, right?
Yeah.
Well, I agree with that, but I think it's also like, how long can that continue? I would guess that we would have maybe 1 to 2 more real bull markets in us. Like, there's only so many people in the world, and there's only so much hype that crypto can get. And I agree with, after that cycle stops, and maybe we're seeing the slowing of that effect, we'll see more of this dispersion and a retreat towards actual value.
Yeah, and just to double click on the point about meme coins, when I say that there's a kind of maturation of the market, it isn't necessarily that people are focusing more on fundamentals. It's just that the average participant is becoming savvier to what the actual meta game is. So I think saying that meme coin as a category has done well, it also kind of abstracts away some of the nuances, right? So if you look at majority of the meme coins, there's like 600,000 that were launched on like Pump.fund. Majority of them just went to zero. There's like a handful that did very well, but you could argue kind of that for things like WIF, for instance, a lot of people kind of saw it as a levered bet on Sol, and the bet on Sol is basically the growth of the ecosystem. So there is like some basis in kind of metrics and maybe some kind of more cynical awareness of narratives and how short-lived they are. So I think it wasn't like 2021 where you basically just close your eyes and just that meme where you just throw a dart and then everything goes up. Even in the meme coin land, I don't think the cycle was like that at all.
Yeah.
There's definitely more kind of apex predator type of PvP maturation in the market.
So we'll close out this first part of the conversation, but maybe to wrap up this first part, if you're sitting in the audience and you're like, all right, I'm trying to figure out how to like be positioned going into the end of the year and into the next, maybe into the 2025, there's probably two mentalities. There's, hey, I'm going to try to pick these narratives that could be hot. Maybe it's DPIN, maybe it's L2s, maybe it's consumer, and I'll try to pick 1 or 2 things in each of those categories, and I'll try to get specific, and maybe AI rips, so I'll pick a BitTensor or Kosh or Render or something, and you pick 1 or 2 of these things. The other is like I have no ability to outperform. I have no ability to figure out the narratives. It's kind of almost like how people think of the stock market today. It's like just buying an index, basically. So I'm curious if you're maybe not a professional crypto investor and you're just sitting in the audience today, how do you start to position for 2025? Is that you just buying Bitcoin, ETH, and Sol or something, or are you trying to play those games?
I'll take this. I mean, I actually
or it's like I'm just buying Sol. I don't get what you guys don't understand.
H Sol. I actually think the way most people think about this, perhaps even including this panel, is kind of backwards. I think the mistake is looking at a big macro trend and then trying to work backwards from it and trying to understand what happened, which sort of feels like astrology to me. But if you were in let's say, the trenches of Solana, I think the reason these meme coins and all these token launches and why Solana and whatnot worked, at least for this cycle, is that it's because it was actually the best place to do crypto. Like launch tokens, distribute tokens. Phantom is still arguably the best wallet in crypto. It's still a first-class citizen support for Solana. Jupiter is quite good. Pump is actually, I mean, it's a degen UI, but it is used, obviously. You can't argue with the demand. And so I think the mistake is focusing too much on the score as opposed to how the game is played, right? Like, what chains actually work, who's actually building on these things, what is showing traction, and actually traction, like checking the data yourself on something like Dune or Blockworks Research.
Great plug.
As opposed to letting like influencers say like, oh, this is going to go big just because I said so, and it's like, no, it's generally bullshit. You need to really think for yourself. I think like Kyle from Multicoin does this pretty well, and it gets pretty edgy and whatnot. Yeah. But like he's one of the best, has one of the best returns for a reason. And so I think you don't want to focus on the score. You want to focus on the ABCs. And it's like, okay, if you think there's a chain that's actually way better suited than Solana for doing a certain activity, maybe it's DeFi or maybe it's NFTs or something like that, then it's like, okay, there's obviously going to be people that use that chain. And if people use that chain, there's going to be attention on it. And there's attention on it, that's kind of the starting point of, let's say, a narrative.
Okay, so then the question I would ask you, Mert, is a year ago, it felt really obvious to you that Solana was going to be big before everyone else realized it, because you mentioned the trenches, because you were in the trenches. So now, September of 2024, take us into the trenches, and what is starting to feel obvious? What maybe feels obvious to you as someone in the trenches that doesn't feel obvious to the rest of the industry yet?
Well, I think there's nothing too revolutionary. I would say maybe a few things. So one of the biggest, and obviously I'm a Solana guy, so people will think I'm biased, but I actually believe this. Like Solana is getting a new client called FireDancer that is, they're doing a bunch of talks at Breakpoint, and they're actually going to be improving the network performance by 10 to 20x, including the fee markets and all this. And I think like most people don't understand what that actually means. It's actually never been done in crypto. I mean, multiple clients have been done, but not rewriting a monolithic L1 in basically assembly and super high performant computing. And then the other thing that I'm really interested in is actually SocialFi. So I actually, I get hated on for this a lot, but I actually thought Friendtech was a good idea. I don't think it was executed good, but I think the idea behind it is fundamentally makes sense. Things like Fantasy Top, similar, Time.Fund maybe, even Farcaster in a sense. I think like social, to me, is going to be the next big wave, especially as people start understanding that, we need to focus more on consumer, maybe mobile first, like PWAs. That's generally where users are. They're not generally on their desktops too much. And then you put that together with kind of the social layer of crypto, which kind of keeps growing. And I think SocialFi will be the next big thing.
Antonio, I see you nodding your head a lot as Mert is saying SocialFi. What are your thoughts around Friendtech and Fantasy Top and just SocialFi in general?
I just agree. Usually we see these trends in crypto start with one thing that blows up. Everybody gets really hyped on it, and then it fades away really quickly as well. And I think that was clearly Friendtech with the SocialFi trend. And what are we talking about here? We're talking about how fundamental value is layered on top of attention, and that leads to a narrative. Well, these things are fundamentally value based off of these narratives and based off of attention. What do people pay attention to? Social. It's like people. it's content, it's all of that. And if we can just make that tradable, I think that is going to be a really big trend in crypto. I think you just see this with the expansion of assets, of the number of assets traded within crypto. I really think that this is a key driver of basically everything that's become big in crypto so far. It's like back in 2017 with ICOs, we had 1,000 things that could be traded. And then Uniswap, okay, wow, we have 10,000 things that could be traded. NFTs, 100,000 things. Now, with things like Solana, things like L2s, things like sovereign L1s, the performance has gotten good enough where you can have millions, billions of assets traded. And it's gotten to the point where we can create the products that people are already paying attention to, and I really just think that's social. I think it's going to take a while for this narrative to come to fruition, but it always does. I think there'll probably be a hype cycle for this in 2 or so years from now, and then we'll see more fundamental value driven from that in 5+ years.
Can we talk founder incentives? Because I think for the last 4 years, there's been a strong incentive to launch an infrastructure, to do something in infrastructure. There's very little incentives to go build, to do like maybe a company that has traditional equity structure, not a token, or a consumer app. It's just the returns from a founder and a builder's perspective is much greater if you go, even if you go do the 100th infrastructure L2, you will probably make more money than, at least in the last couple of years, than if you went and did a consumer thing. So I'm curious if you guys feel like that is changing, or if that doesn't actually matter, or yeah, I'm just curious to get your guys' thoughts on those incentives.
Yeah, I think there's probably 2 things that are happening that's self-correcting this issue. So number one is the thing that I mentioned just now, which is the maturation of the market. People are realizing that, oh, if you bid a L1 with like 4 users at 10 billion valuation, as the VCs are dumping their tokens, you're probably not going to make any money.
Yeah.
So there's no kind of public market demand for a lot of the ghost chains that are launching. So once that ARB is closed, once founders realize they can't just start, another kind of copycat chain and then instantly print 100x on paper, then I think a lot of the talent will start to explore other things. I think the other thing is also the bar for entry for competing on an L1 is much higher now, especially with Solana. Last cycle Solana was still facing a lot of issues. I think the past few years they've ironed out a lot of bugs, and then with the launch of FireDancer as well, I think a lot of the kind of throughput or latency issues are becoming increasingly kind of closer to the limits that are set by physics versus just like optimizations. So like if you look at the current batch of L1 or L2 founders versus like last cycle, and then compare that to like 2017, 2018, the pedigree and the kind of sheer talent that the teams have been growing exponentially. So I think the barrier to entry to starting an L1 that will remain relevant after 6 months is also incredibly high. So those 2 things are kind of correcting. And I think more of the talent will start to go up the stack and build the application level.
Yeah. Maybe I'll ask the same question, Alex, to you. I also don't know if people call you Alex or Alexander, so I'm sorry if
Alex
I'm
is
offending.
good. Yeah.
Okay. What is starting to feel obvious? I mean, I don't know how Hack is one of the biggest funds in the industry, and you guys invest globally. What is starting to feel really obvious to you that maybe you think others are missing right now?
Yeah, well, to me, there's kind of 2 indicators. One is what has traction and has like real adoption. And then the second thing is what's the most interesting technology we're seeing. So I think on the traction side, it's still very clearly stablecoins. Everybody knows this story. It's been for a while. Tether, the amount of money Tether makes and the adoption around the world and all this stuff. And so I think you can follow the money there, and you could think about, well, maybe payments built on top of stablecoins is really interesting. And once you get to this world where many people around the world are actually using stablecoins for payments and as dollars and as more than just a store of value, like maybe Bitcoin or something is. Maybe DeFi is there's like elements of DeFi that are very exciting, all these sort of financial things. That's cool. And then for us personally, just on a tech perspective, I think like the crypto AI intersection is really interesting. Like it's really early, and there's like a lot of, probably most of the big like crypto AI coins are actually just meme coins, which happens every cycle. One of the biggest like exits in like 1999 was Mark Cuban's company, and was like putting radio on the internet, and it was also just a meme coin. It didn't actually have any tech. So there's a lot of that, but it also gets added into the actual good stuff or lumped in. So that's very exciting. Like there's really cool stuff there. Those are where we're spending most of our time, I would say.
So you're saying Ansem is the new Mark Cuban?
That would be, yeah, I mean, that would be a great compliment, don't you think? You know, he could own an NBA team afterwards.
Let's shift to just talking about Ethereum.
Wait, I want to talk about the incentives thing.
Yeah.
I do think it is severely broken. Like incentives, founder incentives for sure, but I would say general investment incentives are broken. And here's kind of what I mean. It also goes back to what we were talking about social and narrative. In traditional, let's say, closed-off markets like private equity, you have a closed set of investors, and then the founders go to work to make the product work and get demand and users. And maybe if they work hard enough, they get acquired or go public, or some liquidity event finally happens after years of grinding. In crypto, it's not even close, right? In crypto, first of all, everything is social and narrative-driven, meaning that if everybody has a consensus bet on something, and they fundamentally all agree that something sucks, you generally tend to bet with the consensus because you're like, wow, like everybody's doing this. And so, for example, hating on Solana was quite cool a few years ago because it's like, oh, it's a scam chain, it's centralized L1, all this stuff. And you might not actually have looked at anything yourself, but you just, the social layer is like, reach some consensus that this is correct, and you outsource your thinking to the social layer. But what happens when you do that is generally the biggest bets, the way to make money is to be contrary and to be right. And so if you have an environment where everything is reliant on narrative and social consensus, being contrarian and being correct becomes very difficult because you could actually be correct, but the market might just say, like, we're going to psyops you. We don't care if this is a reality or fundamentals driven. This suits our bag, so we're going to do it. And then, of course, the founder can get extremely rich with a token within a year, and then maybe they'll think that they're doing something correctly because now they're super rich. Including the team itself. Like the team might not have shipped anything, like the early team members, staff engineers and whatnot. They'll still get rich, and then now they're like, we must be doing something correctly here. Yeah. And it's just a huge contrast to how startups work in Web 2.
Yeah, I think that's a great point. And I think, what does innovation require? It requires contrarian thinking. It requires you to be right, and it requires absolute dedication and persistence. Right? And exactly because of what you're saying, I think that is quite hard to find in crypto because all the incentives as a founder are pulling you away from that. So it really just takes a true believer, and I think that's actually making the innovation take longer and not have as much attention as it should.
So maybe the contrarian thought today would be that tokens are actually inhibiting, or the way that teams and founders get tokens is actually inhibiting some of the innovation in the industry because you have these quick cycles, like maybe what happened with Friendtech. You could argue Friendtech could have been a better and bigger company and a better success if they didn't have liquidity on their token so early. What do you guys think? Maybe Mert and Antonio, I'd pick on you guys from the founders' seats. Like, what do you think about this structure?
Anything world-changing takes a long time to build. Takes at least a decade, right? And so if the incentives are just pulling you in a way that makes you short-term focused, then you're not going to have that world-changing type of innovation. It's what Avichal said on the last panel. It's like everybody always overestimates what can be done in 2 years and underestimates what can be done in 10 years. I love that saying.
But then what's the solution to that? Is it have founders have a token lock of 8 years and teams have no vesting?
I think there's some things on the incentive side, but I think naturally we're at the point now where, at least 7+ years into crypto being relevant, I think that there's enough founders now that have been around for a while, and most of them have left, but the ones that stay, and there'll be a couple ones that come in that are the true believers and say, I just don't really care that much about the money at this point. Like, who cares after a certain point? Yeah. Look, I just don't care if you guys believe in me or if you guys agree with me. It's irrelevant. I know that this thing is going to be really big, and I'm going to go out and build it because that's the actual purpose of my life at this point. Can you find those people? And I think those people are born and they're made. And I think that will start to happen. And there's maybe incentives that hold that back for a certain period of time, but that's just the way the world works, and those people will emerge in crypto.
Yeah. Do you think DYDX would have been more or less successful if you guys didn't have this token out live? If you didn't have the token.
It's an interesting question. I think that I won't speculate too much on the token in particular. I think on balance, it was probably good for DYDX and did drive a lot of attention. And that's the problem here, is that even if you are a true believer, you have to play the game. Like, you have to probably have a token. You have to probably care about narratives and marketing. You can't just sit here in your ivory tower being like, I'm absolutely right, and I'm going to build this thing. Nobody's ever going to pay attention to you, right? So it's like, you have to be that, but then you have to play the game, and you have to sit here on these stages and talk to people from that place and show your true belief at the same time. And I think that does come through to people. So yeah, I think that was a reasonable thing to do in that situation.
Yeah. I think actually a really good example is Coinbase and Brian. And I'm sure Antonio would agree with me. Like Coinbase, before they went public, was grinding through some shitty markets for 8 years. Things were happening. You know, FTX happened, and FTX was kind of just this kind of wild west. They would just do whatever they want. Brian's like, no, like we're going to do this the right way. And I mean, Coinbase didn't have a token, right? They actually went to the public market. Same with Base. Base doesn't even have a token, right? And I'm not saying like not having a token is obviously the way or something, but like you got to be in as a founder at least. I mean, if you're not a founder or if you're not working on something, it doesn't probably apply too much. But as a founder, you got to be in it for the love of the game, right? Yeah. Like you think there's something wrong with the state of some domain that you're passionate about, and you're going to say, I'm going to fix this, and I'm going to do whatever it takes, however long it takes, because like if I didn't do it, I would literally burst. Yeah. And that's just pretty rare from what I've seen so far.
Yeah.
It's probably a controversial thought, but I think a lot of the incentive misalignments could be solved if you just extend founder vesting. Because right now, most of the vesting that we see is like 2 to 4 years for a lot of the tokens. So obviously, some teams take like maybe 2 more years to actually launch the token, so it's like 6 years from when you first started. But if you get a mark-to-market kind of liquid token, 2 years into building a startup, which is maybe even before product market fit, then your incentive is actually to engineer as much narratives and play the social media game, pump your token as much as possible and cash out. Right? That's the kind of economically rational thing for a founder to do, instead of actually build the product out and then kind of endure those market cycles. So I think it's deeply controversial still to like extend founder vesting, because then the question is, okay, do investors also have to extend their vesting into 10 years? In that case, what happens to the market? Is capital still interested? But it seems like a pretty simple solution. So I'm actually surprised that not more teams have done this.
Yeah.
I somewhat disagree with this. Like, I think there are certain things that you can do on the incentive side, but to pull back the point that Alex made before, the returns and the value that we're creating here is so exponential that really the only thing that matters is what are the absolutely best founders doing. It's sort of irrelevant what everybody else does around them, right? It's like we're just going to be a few products, a few things that actually go out and drive value in the market and in the world. And like I was saying, I think those types of founders is what Mert was saying. It's like you're just bursting at the seams. You have to create this thing. You have to build it. And those type of people, they don't really care that much about incentives. They're just like, I believe so much in this thing and in this market that I must go out and do it. I'll speak a little bit for myself because I have a personal story here. So I actually just stepped down as CEO of DYDX a couple months ago after building in the space for over 9 years. I was an early employee at Coinbase, building at DYDX for 7 years. And the reason I did that is because I actually believe that it's going to take quite a lot longer than that. Like, I'm really asking myself the question, and I felt like I needed to step back to ask this question, am I going to dedicate my life to this? Am I actually going to continue building DYDX or whatever it is in the future for 10, 20, 30 years? That's a hard question for somebody to ask themselves, right? And I think you need the people that actually ask themselves that question, go all the way down, and are like, yes, I will. And I will do whatever it takes, and I highly respect those people. There's a couple of them. You mentioned Brian, maybe like Vitalik, maybe a couple others like Hayden out there, that you see that in them, and they're not in it for the incentives or the money or the value, or even that anybody cares what they're doing. Like Hayden just believed in AMMs. Brian just believed in Coinbase. Vitalik just believed in Ethereum and decentralization. Who are we paying attention to? It's still those people 10 years later. So ignore all of this stuff. It's just go out and find those people. You can see it in them. And when you see one of them, actually believe in them, invest in them, try their products, and support them.
Yeah. All right, I'm going to switch gears a little bit and talk about Ethereum. So trying to bring it back to the topic of this panel, which is defining the meta of this cycle. If you go on Twitter right now, probably the big meta and big conversation is Ethereum cooked, right? You've got Bitcoin's went up a lot, Sol has gone up a lot, ETH has not gone up a lot. And sorry for the bankless boys. But one question is like, have the L2s been helpful or parasitic to ETH? And have the L2s been helpful for the network, but parasitic to the asset, or helpful for both, or parasitic to both? And I'm just curious to get your guys' take on this meta question that everyone's asking.
I don't think they're parasitic. And I actually think people are overfitting on what's happened to Ethereum because, again, everything is social narrative. And if a few people say Ethereum is cooked, then they're like, oh, wow, no, shit, like mass hysteria. But they're not parasitic because you got to kind of look at the reality here. Okay, like what are the three possible paths for Ethereum? Well, one is they don't add L2s and it's stuck at 12 TPS, and then nobody's going to be able to use the chain, right? That's a no-go. That's obviously not a viable future. Number two is they maybe rework the L1, right? They try scaling the L1. They maybe add back sharding, execution sharding, and all these other changes. And okay, now that's going to take 3 to 4 years at least. Like that's a very ambitious roadmap. The EF guys will tell you this as researchers. It's a very hard thing to do. I mean, they can do it. They have the talent for it. But by the time it's done in 4 years, it's like other chains have already stepped up to the plate. Okay, so then the only option left is L2s, right? What's the only possible path? It's, okay, well, you're going to do computation off-chain on an L2, and then they're going to, one, use ETH as money to interact with things on that L2, and they're going to post data to Ethereum, the blob space, right? And the bet there is if there's enough usage on these rollups, then they'll have enough activity going on such that the costs will meet supply and demand, and then you'll start making money finally. And so I don't think, like you could say it's technically, if Ethereum were the scalable L1 of something like of a Solana or like even a Sui, you could say then it would be parasitic. But since that's not the case today, the reality is that's the only path. And if that's the only path for it to survive, it by definition can't be parasitic. And I just think people have completely overblown the fact that Ethereum is like cooked. I think it's still the ecosystem with the most attention. I mean, it has the largest market cap by far. The L2s still, I mean, Arbitrum and Base do quite well. And so I would not get psyoped by Twitter. Because there's also this thing where like you want to play the victim and you're like, oh, like we suck so much. This is the most hated rally ever. You know, make Ethereum great again. And I feel like, no. Ethereum is already great. Don't say make Ethereum great again. Keep making Ethereum great again. Or like, you know, like don't psyops yourself into this. That's what I would say.
Yeah. Anyone want to take the other side of that?
I think you make a good point when you mention that the differentiation between Ethereum and ETH, the asset. So I very much agree with Mert in that I think Ethereum is the world's most biggest liquid programmable collateral, and there is a healthy ecosystem of L2s building on it. I know you disagree with the name, but for instance, like Mega ETH, make Ethereum great again, is an L2 that's building on Ethereum that's trying to enable similar performance as something like Solana. So there's a lot of interesting developments happening there.
That's what Mega stands for? Mega Ethereum?
I think they retrofitted it back in.
Yeah. I'm an investor. I told her not to do it. But, yeah.
But yeah, I think the development is going. But the reason why people think it's cooked is because of the price. And I actually commented on this back in May. So we did a podcast episode about why I thought Ethereum as an asset was cooked. And I think it's because of what's kind of happening on the ETF front, which we can talk about. But effectively, TradFi was already fully positioned into crypto through Bitcoin, and Bitcoin is very much perceived as a macro asset, right? There's like the narrative around digital gold around it, versus Ethereum, which kind of launched their ETF shortly after the Bitcoin ETF. So a lot of the appetite was already taken up, and ETH is kind of seen as this quasi-tech, not really macro type of bet. I don't think TradFi really understands where to fit it into the portfolio yet. So the ETF, in my mind, was always going to disappoint. And now people are using that price action to justify or retrofit it and say that, oh, this is a reflection of the fundamentals of ETH. Ethereum as a platform is losing developers. But I mean, if you look at any of the ETH conferences, I think it's quite easy to, digress.
My extremely left curve take on this is that ETH the asset has struggled simply. L2s actually have hurt the ETH the asset simply because if you have $10,000 or 100K or whatever it is, and you're coming into crypto and you say, I want to allocate to ETH, last cycle, let's use $10,000. Last cycle, you just put $10,000 into ETH. Now, if you want to allocate to ETH, okay, well, do you put 2,000 into ETH, but then 2,000 into Arbitrum, 2,000 into Optimism, 2,000 into Polygon, right? So it's just basically diversified people's allocation to ETH.
Yeah, exactly.
There's a fundamental argument too, which is that all these L2s have taken significant fees and revenue away from
Yeah.
from ETH as well. And I think the buy and burn probably did actually contribute to the price in a meaningful way, and that's gone now.
Yeah.
I do think, I think the important question is to think about it under best intentions as, is this like a business strategy from the Ethereum Foundation that's like short-term loss for long-term gain, and the short term is like, well, we're going to intentionally unbundle. Like this is a classic business strategy in not just like Web 2, but everything. Like you could bundle things together, you can unbundle. So ETH like radically unbundled. They unbundled execution. They unbundled a lot of its infrastructure platform to this new ecosystem. And I think the bet was we're going to suffer fees, at least in the short term, but maybe we are going to maintain market share over time, and maybe we're going to foster this like ETH-aligned ecosystem. And yeah, for sure, jury is still out whether that is the case. Like the counterfactual is hard to say. Like if Ethereum, I mean, to Mert's point, like there was some de-risking. Like what if Ethereum never really executed well on like a scalability roadmap, and at this point, Solana would probably be like 3 to 5x more, I mean 10x more market share relative to ETH.
Yeah.
But it's hard to do the counterfactual, and we're still in the middle of the game. But yeah, maybe it's for the long-term benefit, especially if you have the argument that like ETH is collateral and it's different from like a private company, right?
Alex, one thing that people aren't talking about now, but we will be talking about it in probably 3 months, are all these new L1s are about to launch. Like Monad's going to launch, Verachain's going to launch, Mega ETH, probably not this year, but some point early next year, I would assume they'll launch. At what point do we stop? Do you think there'll be a time when we're like, okay, we're done funding the new L1s, or it's just like every cycle we're just going to get new L1s and we fund 50 of them and one of them makes it to the next cycle and then the next cycle there's new ones? And what do you think of this new L1 meta?
I mean, I certainly think that every cycle, like every time I'm on stage here, people ask me that question, and it's like, when will it end? And here we are. Like every year, it's still a pretty good category. For us, like we look at the technology really closely, and as long as there's still like really interesting new technology to back, we'll probably back it, right? Mega ETH is an L2, but like a lot of these things that are coming out now are still pretty interesting new technologies, and so it's probably worth looking at and exploring. I don't know if the network effects certainly still grow over time, right? Like the longer ETH and Solana are the number 1 and number 2, the more likely they will continue to be. But also the TAM kind of grows over time, especially if you think some of these layer 1s can also have moneyness, right? So it's sort of this trade-off.
Yeah.
So yeah, I think that's a great answer from a rational perspective. Maybe I'll take the emotional, not investor perspective on this one. I'm tired of it. Like, I've been in this space for 10 years at this point, and I'm tired of us just playing the same games with ourselves over and over and over. I think we really need to start asking ourselves the question, what are we actually building that the world cares about? Nobody gives a fuck about the next L1. Like, it's not interesting at this point. I'm not saying that there's not new technology. There absolutely should be, and these people should continue to build these things. But we need to shift our attention as an industry to what are we actually building here? What are the products that people are going to use? What are our ideas for that? Who are the builders for that? Can we invest in that? Can we pay attention to it? And I just feel like that's where we need to shift our attention as a space. And I think it is starting to happen to some extent, but we'll see that really start to be the case over the next 5 years.
Well, it's a good way to end it. That's all the time we got. Please help me give them a round of applause. Thanks, everybody.